JJ the CPA here, hope you're doing well. Wanted to talk about the sole proprietor, the Schedule C, the self-employed, the independent contractor, and then the 1099s that are related to those circumstances. So the first thing to note is that if you pay out 1099s, it doesn't matter what your structure is or what your entity is, you don't get to include the 1099s you're paying out as part of your payroll cost to determine your max loan. All you're able to count when you're looking at Schedule C is line 31. If you have another stream of self-employment income, which can just be other income from your 1099s or a K1 that indicates self-employment income, which would be on box 14 or 4A, looking to your Schedule E, that is going to indicate to you what really poured down into one spout as your self-employment income. So I am telling people that if you're in the realm of Schedule C and you got 1099s, and this would be 1099 miscellaneous, you're getting a K1 from a partnership and you're like, man, is this subject to it? What am I doing? Look at the Schedule C, and if you've got net income there, rest assured you're going to go to Schedule SC unless you're a statutory employee with a W-2 marked as such, you're going to find that. Now, a lot of times with the partnership K1, if you have the partnership K1 there with you, then you'd be able to look at that and see, does it have a box 4 or 14? But if you're also just going, hey, JJ, how do I just get to the quick of it? Go to Schedule SE. And here's why that's such an important schedule. Because those that pay self-employment tax are in the same position as those that get W-2s. And why? So whether you're an employer or whether you're the employee, we all know that the paycheck that's paid has 7.65% withheld for Social Security and Medicare tax. And the employer has to match that 7.65%. Now, we know there's some limitations with Social Security. Won't get into that aspect of it because I don't want to cloud the issue. But nonetheless, with wages, if you add those two amounts together, 7.65% withheld and 7.65% matched, it's 15.3%. Well, when you're self-employed, independent contractor, sole proprietor, you are your own employer as it relates to self-employment taxes. So when you look, and you'll see it on that form Schedule SE, the self-employment tax, which is in addition to regular income taxes, is 15.3%. So now we just work it backwards. Remember, on wages, it's 15.3% that's sent in. Employee-employer match together is 15.3%. Well, when you're self-employed, there is no employee, there is no employer, so it's just 15.3%. So when that income is subject to the same tax, right, Social Security and Medicare, then it puts those things on equal footing. So if you're getting a Schedule K1 from an S Corp, you're not going to find that on Schedule SE. If you're getting income from a partnership and there's an amount in box 2, that's not going to be in Schedule E. What you're going to find on, Schedule SE. What you are going to find on Schedule SE from a partnership K1 would either be box 4A or box 14, which is self-employment income and guaranteed payments. Now, if you don't have a Schedule C, you received a 1099 miscellaneous, box 7, and box 7 says non-employee compensation, and you're just reporting that as other income, it would be other income subject to self-employment taxes, which is that 15.3%. So for those that are like, what do I do? What are you saying? Go to Schedule SE. And I'll tell you this, if you don't have a Schedule SE, I don't know how you qualify for PPP. Now, here's the thing. I'm getting comments on YouTube that they're saying, hey, I put down my Schedule K1 for the S Corp and it went through. Okay. I got net income on my Schedule E and it went through. The banks put it down and it went through. Well, it might just be a bank that either doesn't understand what it is that actually qualifies, or they're just taking what it is on page 1, quite frankly, didn't really look at your documentation and then just jammed it through. So the thing to take note of here is that it's a paycheck protection program. Paycheck meaning income subject to self-employment tax, which is nothing more than Social Security and Medicare tax, which is nothing more than payroll tax, all in that same boat. So at the end of the day, if you do qualify for it, are you in trouble? I don't know. I don't think so. Would you maybe have to pay it all back? I would think so. And all I mean is that at the end, 100%, every single one of us that got PPP money will have to sit in front of the banker and show how the money was determined, meaning that monthly payroll cost. Even though you provide it up front, it's going to be re-reviewed. And then it's going to be, what did you spend the money on? So I've got another video talking about the sole proprietor, self-employed, how do you document paying yourself? But at the end of the day, if you got it, I understand that you didn't do it with bad ethics or immorally, and you just put it in and the bank took it. But if you don't qualify for it, and once that's determined, then you would need to pay it back. So at the end of the day, all I can say is, kind of up to the banks what they're doing, but it's not going to be up to the banks when it comes to the forgiveness. And maybe you, quote unquote, aren't going to be in trouble, but they're going to go, shoot, well, you got the money. Guess what? None of it's forgiven because you didn't use it for the purposes in which it was intended. So let me prove this out a little bit. When you're getting a K-1 from an S Corp, how do you have any kind of qualified expenses that forgive it? There aren't any, okay? If you have a Schedule K-1, Box 2, how do you have any expenses that are gonna offset it? You don't, okay? Now, if you're getting a Schedule K-1 from a partnership and it's subject to self-employment tax, it qualifies, but at the same time, how do you have expenses that actually qualify as the forgiveness amount? So it's on Schedule C, sole proprietor, self-employed, and the independent contractor being subject to that self-employment tax. In essence, you've established there is a payroll, there is this compensation that you're getting that is equal to payroll. See my other video. I'll put a link in here to the other video where I talk about an idea of how to establish it. On April 14th, we still haven't received some guidelines. But the thing is maybe you got the money, but if you have a rental property, Schedule E, what expenses do you have that are going to offset it? You don't. Maybe utilities, but you don't have rent that you're paying. You don't have payroll that you're paying. So at the end of the day, all I can tell you is here are the rules and the aspects that come into play that allow you to get this, to get these dollars. So, all right, hey, I'd love it if you'd subscribe to my YouTube channel, and then don't you ever forget, you've never met a CPA quite like me. All right, hey, thanks for tuning in.